This conference will now be recorded.
Okay, good evening, everybody. This is Greg Morton. It is Saturday, February 4th, 2023. And then this is the weekend video update for Canslim growth stock investors, brought to you by the Greenville Eastside IBD Meetup Group and the Stockyard Meetup Group. As always, educational purposes only, not recommending stocks or securities to buy or sell, blah, blah, blah. Y'all know it. Okay, so we're going to look at the M factor like we always do. Current market review. I think it's now evident that we do have a change in character, a trend change in place in the market. We'll talk about action plan currently and just jump into some charts and see a lot of constructive action. I'll mention the upcoming IPO class that Trader Lion is sponsoring, and then our next monthly meeting will be Wednesday, February 15th, 2023. So, M factor. As always, O'Neill teaches us to diagnose, to interpret, not to predict. We want to look at the action of leading stocks, action of stocks owned, market pulse, distribution day count, price and volume on the indexes, most of which I incorporate into the coloring book to track those and help me keep up with it. So last weekend I showed this slide and said maybe, and this weekend I'm willing to say yes, at least as of Friday's close. It can change, and of course, even if we do and get a new bull market that continues, it still can pull back. It's not going to be straight up. And so oftentimes it'll have legs up just like we had legs down. So that means there will be some drawdowns. And I'll talk about in a few minutes the one flaw or difficulty that I see right now, even amongst all the good things. So let's hop out of here and go over to MarketSmith first. So here's the NASDAQ. This is the daily chart. Here's our follow through day back here on January 6th, the first orange arrow. And then these other orange arrows are subsequent follow through days. And there are just a slew of those. We had 3 this week, Tuesday, Wednesday, and Thursday. So that's just showing we have additional tailwinds. Doesn't guarantee it's going to work, but that's just really a strong bunch of those going on. Look at how the volume's picking up too. Look at our moving average lines. Now we have the 10 above the 21, above the 50. We have all 3 of those have turned up. 200-day is still down, but the NASDAQ has been battling there for a couple days and then retook it and has moved away from it. So that's very constructive. We're still, 25% off the recent peak, our all-time high, but definitely making some constructive progress. S&P 500, similar, except now that its moving average lines are all stacked in the correct order. I'd say the 50 is above the 200, making progress there. Had some subsequent follow-through days, not as many as the NASDAQ. NYSE, all 3 stacked in the correct order. 200 hadn't turned up yet. Dow, things have kind of bunched up on the Dow. Move that over a little bit. But still above all the key moving average lines. But, a few months ago, several weeks ago, it was the Dow that was clearly leading, and now it's switched. The NASDAQ is. Look at that RS line going down there. What did the NASDAQ look like on the RS line? Yep, good. So would have expected that. Russell small caps, they've been leading the way up. Looks very strong. Moving average lines are in the correct order. Looks like the 200 days trying to turn up. So while the small caps can't do it by themselves, they often do lead the way up as well as the way down. S&P 600, again, just kind of screaming higher. You take away this last week, it's like, okay, we're just consolidating. Here's resistance. As we come across here, and then boom, we just have a week like last week where things go wild. If we look at the coloring book, there you can see the subsequent follow-through days. Just starting on the left, we now have 13 buying days, 7 selling days. So that's constructive. That's been in the red forever and ever. And then suddenly it flips, and now we have 13 buying days and 7 selling days in our 25-day window. So that's constructive. NASDAQ had all these subsequent follow-through days, has 0 distribution days on the NASDAQ now. They've all dropped off, and we have just 1 left on the S&P 500. And I think we do still have the full 3 that are on the Dow. Market School moved to a 7. This week, 100% exposure is 5, so it has a couple in its back pocket, so to speak. The power trend turned back on this week. That's just an additional tailwind in the Market School model, and we still have new highs exceeding new lows on both the NASDAQ and the NYSE. So I haven't filled in the individual data from Friday yet. We did have that very hot jobs report come in. And of course, that hit the markets. And the Fed talking heads, I'm sure, will be back in it next week. So we'll see how much they hammer the market down as they react to that Friday jobs number. And the way things screamed up this week, the market's going to look for any excuse to pull back and consolidate some anyway. And there may be some profit taking. So we'll just see what happens there. But just lots of green and just a lot of things really showing us, hey, we do have, it looks like more than just a bear market rally going on right now. May fizzle out, may chop and go sideways for a while and frustrate us, but it's still just a lot of things are showing that we've turned and that money, big institutional money, is starting to flow back to the growth trade. And group teaching portfolio, and it's things have been hard to get in. I'm going to talk about that in just a minute. So we're still just 57% invested, still have some short positions via puts and fry, and then have actually 2 of our 4 longs or have had to go with indexes so far, the equal weight S&P 500 and the equal weight NASDAQ, full position in Axon, 50% position in PCAR. So we'll see how those work out and how things go. Just up slightly for the year, 1.24%. So lagging the NASDAQ, which is, we try not to do that, but that's where it is currently. So let's go back over here. Looked at that. So the questions we've been looking at for several weekends now. So I've had these up. The one that's been the key one has been number 3. Has the Fed pivoted? At least we had a little easing by Powell this week in his language. We'll see how much they tighten it up next week after that hot jobs report on Friday. So the rest of these are all positive. This the 7th one, the last one, we do see more setups. We are seeing breakouts. We are seeing early alternative entries. So I just think we've had a good change in character, particularly the past 3 weeks. Weekend routine still the key to success. So I guess game time still okay to keep wading in, maybe wade a little bit faster as things are making progress. But there's always a but. The rub is this week was so strong. It looked to me, just kind of an opinion, I guess, that this is just a combination of short covering, bottom bounces, and FOMO kicking in for folks that hadn't done anything or done what they should have done after the January 6th follow-through day. So this week, everything moved. The junk coming off the bottom, ARC was up nicely, and you go, wow, look how much that's up since the first of the year. Well, it's still 73% off the peak, even at Friday's close. So you have to keep that in context. So this was really a hard week, actually, I think, just because everything was moving, and our job is to separate the wheat from the chaff, and it was hard to do this week, I think. So hopefully, as we move forward, we'll be able to do this, and we discuss how to do it. I think for me, I just need to stick with the best of the best Canslim stocks during the watch list process. So I'm not looking at the stocks that are losing money, not looking at stocks that don't have strong earnings and sales, not looking at illiquid stocks, trying to be very, very disciplined, as we always talk about, 1 or 2 good working decisions beget more potentially good decisions. So we'll see how Axon and Paycar and the indexes continue to do. We have to remember we only want to own 6 to 10 stocks total. So we want to be picky. They need to earn the right to get our money, to be in our portfolio of the best. We don't want any forced trades, and we don't want any audibles, as Mark Minervini talks about. So let's review some charts. It's easiest to just jump into the charts to see what I'm talking about this week. So I just put some tickers in here. Some of these are setting up, some of them have broken out and are extended. So here's SQM, which is one of the lithium stocks. So fantastic, triple digit earnings and sales, tied to the EV. Has a double bottom base in place, has come back through the moving averages. So, one worth keeping an eye on, just strong numbers. Still it's real high industry group, so that's a little bit of a problem, but again, one for people to study and make a decision. On semiconductors, so we're seeing strengths come back into the semi, broke out this week. RS Lines at blue dot has earnings in 2 days, so maybe watch what it does with earnings. Again, Canslim numbers like we're trying to stick with, and we're seeing some strength in semis overall. CLH, a little different industry. Again, triple digit earnings, strong sales growth, liquid 39 million, has some top rated funds in it, including Lord Abbett and Fidelity Contrafund, just recently starting a position. So showing some strengths there. It's broken out, still in the buy zone. Earnings not too far off. And this one actually is one of the ones that broke out on the follow through day, that little aqua aura arrow. No, I'm sorry. I marked the date they broke out because it's in the coloring book. I apologize. Follow through day was further back here on the 6th. Yep. So it came through this horizontal trend line after that. So there was an early entry on that one. Our standard breakout is now up 5% from the pivot. LSCC, look at the weekly first. We always want to start on the weeklies. Good Canslim numbers. Stage 1 cup with handle, a little deep at 49%. Almost, yeah, I would treat this, I think, as a separate 1, 2, 3. Yep, that's long enough, I think, to be its own base. I would treat that as a cup with handle, base on base. And then here's your breakout on that. Earnings coming soon, so you have to be aware of that. Microchip. So again, we haven't seen growth stocks acting well, and we're seeing more and more of them doing that. RS Line, blue dot. I mean, it's extended, so you'd have to be studying it for a pullback. It's already past earnings. Liquid 386 million a day. Good fund ownership. Allegro, we'll come back to this. Triggered the green flag after that gap up on earnings. So we'll take a look at that further in just a minute. TAN, always keep an eye on this. That's the solar ETF. Maybe pull back to that 50. Might be an entry some people would be looking at. And then Axon, trying to get going. Actually had an all-time closing high this week. Not an all-time high, but the prior closing high was 195.54. And the all-time high way back on that same day was 212.37. You can see that on a weekly chart. So it's back here on this side of this cup. So this is this one's been basing 21, 22 for over 2 years. Really, really long base consolidation. Now it's tightened up here. Set up this cup with handle and trying to get going. And you saw we had that one in the group teaching portfolio. And then ON, this one has a lot of overhead supply, but is an IPO, again, putting up good numbers on profit. This is on Cloud running shoes as well as Roger Federer's tennis shoe. So got that one also. So let's hop back over here. We looked at those. EPS season's cranking up big time. and actually we'll be going for the first 5.5 months of 2023. Viable gap up hunting season is open. ALGM that we were talking about, that was clearly the viable gap up this week, maybe the of the month as well as the year. We will see. Here's the intraday 5-minute chart showing, and I missed this one, but these were entries another Canslim trader did take. So here was the gap up. It immediately pulled back. And in Market Smith, due to a programming flaw, this first one's a 1-minute bar. The others are 5-minute bars. So you kind of have to treat those first two bars together. So it came down, had this big wide upside reversal bar. So coming above it or the next bar, entry would be in here. And then this is really the high of the first 5-minute bar, even when you put those two together. So you could have added some there also, still part of the initial buy or part of your B2. And then it had a good day and it's just screamed higher after that. So, and we're going to talk about those at our next meeting. So mention real quickly, so Trader Lion has just announced they're having this IPO class coming up. This is recorded, so you don't have to attend live. They still have the early bird pricing, which I believe is like $4.97. I've signed up for this. I don't get anything for promoting it. I paid just like everybody else paid. But of course, Kathy and Eric Kroll and Eve, as well as Kurt, this is, I think, the premier book on trading IPOs and studying them and learning about them. These folks are all very smart. I stay in touch with a couple of them when I have questions and everything. So I'll put the link down under the YouTube video where you can register for that. But I do highly recommend that. And you might go, well, IPO markets, you've been telling us they've been dead for a year and a half or more. And that's exactly right. And this is the time to learn, because if we're in a new bull market, the other thing we're going to see over the next few months is there's going to be some quality IPOs. Those big underwriters have been missing that money and they just have been waiting for the market to open back up, to open up that IPO spigot. So while there'll still be junk, there's going to be bigger ones. You know, we've been seeing these garbage ones. They're raising $20 million. They're raising $40 million. You know, we want to see the $500 million IPOs. We want to see the big name underwriters. We want to see a company coming out with something new and different to the market, this that we haven't been able to trade that technology or that product before, and that they're doing profitably. And as our friend Amy Smith talks about, if you can find one with triple digit in earnings and sales, you want to keep your eyes peeled and be paying attention. So decide if you want to take advantage of that. Again, I'll put the link at the bottom of the YouTube video. My next monthly online class will be Wednesday, February 15th, 7 p.m. Eastern. You can register at the Stockyard Meetup site. Monthly meetings are $12. You can attend live if you want to. Send you the recording, the slide deck, links to articles that we talk about. If you're a first timer, I send you a courtesy copy of last month's meeting. So this month, I'm still working on the detailed agenda, but the two big topics, we're going to go back and look at an update and give you some more facts on the short thesis on the SPAC Fryer battery, ticker FREY. We spent a lot of time on that last month, and I have more information to share. And then we'll also talk about viable gap up setups on earnings. We're in this long earnings season, so I think that's good to look at if that is a tool that you want to put in your toolbox and something you want to study. So we'll cover that. Prior meetings of interest, the recordings are available. If you don't have written sell rules, this is one of the most ordered ones, that 3-month series that I did. So that's very extensive on writing your sell rules. And if you need help on a weekend review, spent September and October 2021, mainly September, pretty much the whole 2-hour meeting, and more, talking about that. So if you're interested in those, you can send me an email at greenvilleibdmu@aol.com. Here's the meetup websites. You can follow me on Twitter. And of course, you're on the Stockyard YouTube page if you're watching this, and there's a lot of teaching videos and other things in there. So I think that's it. Hope you guys have a great weekend routine, and I'm out of here.